Welcome back. Well, the markets continue to reel under pressure, 21,240. The Nifty Bank, that's the one that's down close to 100,000 points. Nimesh joins us to help us out with what he's picking up in terms of dealing room chatter. Nimesh.
Hi, Nigel. At day's low, it's a tough day for the markets, clearly. But again, today, the larger fall in the Nifty is largely dragged by the financial names. Of course, it has its own reason for the bank Nifty to fall so much. But first signs of capitulation in the broader markets. The mid-cap index is down 3%. And all the PSU stocks are largely under pressure today. Some bit of profit breaking is clearly visible. The PSU index is down 4.5%. But Nigel, I need to put this into perspective as well. But one of the reasons why we're seeing such a sharp fall today is what we saw on Saturday. Because it was a non-institutional day, there was no big institutional participation there. All the PSU stocks and the mid-cap stocks had rallied between 8 to 15% and 20%. So some bit of that reversal is also visible in today's market. The reason for today's fall could be explained by a few reasons. One, it's a truncated week. B, we have the expiry as well this week. And also, historically, we've seen when there are some large accidents in the broader stocks, you see some bit of panic in the broader markets as well. For instance, what we saw today in Z, 32% is owned by institutions and the stock is down over 30%. Last week, it was HDFC Bank. In 2 days, the stock nearly wiped out 15% of market cap. And so was the case with Polycab as well a few days back when they saw a big correction in that stock as well. So, that's typically the reason why, that's sort of a bit of sentiment in the broader markets as well. That's the overall feedback from the dealing rooms. I guess earnings is going to drive the markets near term. We're seeing some reactions to the positive earnings as well. Broadly, the earnings this quarter so far has been on the either on the subdued side or on the negative side. So that's also reacting to the overall market sentiment. Broadly, I guess expiry and the fact that we rallied on Saturday without volumes is other explanation why the broader markets have fallen sharply today.
Well put, Nimesh. And true to its form, January is turning out to be a seasonally weak month for our markets, with the index down over 2%, almost inching towards a 2.5% fall now. What about stocks? What have you picked up?
Well, in terms of individual names, the first stock is HDFC Bank. I'm putting it out also because even after such a big underperformance, there is still selling pressure from the larger FIs. So across multiple dealing rooms, the feedback is the larger FI seems to be, looking to sell HDFC Bank even at this level. So expect high delivery volumes, but there is across the board selling in HDFC Bank today. That's the first one. The second is Embassy REITs. In a weak market, that's holding up in the green, largely on back of strong buy flow. So normally it's not been widely chased institutional stock. But I guess today there is some bit of buying interest back in that particular name. And the third name is L&T. Again, the stock is marginally under pressure today, but the sense is there are strong buy flows. A leading long only fund seems to be an active buyer in L&T. And also there is a Morgan Stanley tactical buy on L&T today. So all put together, in a weak market, that's relatively outperforming. That is L&T.
Okay, thank you very much for that, Nimesh. Mitesh Thakkar is back.